is up, everyone? It's Brian with eXp Realty again, bringing you yet another, what are we calling this?
Market update?
Market update?
Monthly market update?
Kind of. Get together. A little more friendly and less formal.
Monthly check-in and get together. Round table of two.
Absolutely.
Yeah.
So what happened this month, man? What's new?
Well, the big news, which happened on Thursday, the CPI data came in, which is the Consumer Pricing Index. And that's a big indicator of where inflation is at, right? And so that's shown us that inflation has come down just a little bit. And that's what the Fed has been working towards by raising the Fed rate. So this is huge because it shows that maybe we've hit peak inflation. Mm-hmm. Nothing's for sure, but that means that rates have come down.
Okay.
The biggest one-day drop in history, apparently. So that's huge, just because it's been all like doom, gloom, everything around rates.
So what's it down to?
It's down to, well...
I mean, we're talking 30-year, conventional.
30-year conventional. If you look at the average from the survey of lenders, it's down below 7.
Okay.
So 6.7. Realistically, I would say 7.25.
Okay.
Realistically, where we have been at 7.6, but now we're at maybe 7.25.
I had people at 8 not too long ago. So
yeah, it depends on the borrower.
Mm-hmm.
Like the rate is very personalized to you as a borrower, but you could potentially get a 7.25 rate.
Okay.
But the important thing is that rates have come down. Inflation has come down a little bit, better than predicted,
mm-hmm.
lower than predicted. So that means that maybe the Fed will get the message, and maybe they'll chill out a bit.
But you still predicted it was going to go up early November. Last time we were talking.
Yes.
So are you predicting another bump up in a month?
There's supposed to be another rate hike. So unless the Fed changes their tune
mm-hmm.
and says, hey, we've done our job,
mm-hmm.
let's party, and decides to cool it, we're expecting another rate hike. So we're not out of the woods or anything, but
right.
This is important because it gives an indication that maybe things are slowing down with inflation.
So hopefully smaller steps up instead of 1% a month.
Yeah. So maybe incremental. Maybe, instead of it being 75 basis points, maybe it'll be 50 basis points.
Right.
So celebrate, but don't get ahead of ourselves here.
But still buy before the rates go crazy because they're going up every month still.
Yeah, likely they'll still go up again, but yeah, if you're in the market,
mm-hmm.
and again, you can afford to buy right now because affordability is an issue, lock it in because they've come down. I would say lock it in.
But my understanding right now is you're actually working around a lot of these rates with some programs you have, right?
Exactly, and I'm glad you brought that up. So we need to get a little more creative with our negotiating right now. And that's because buyers have more negotiating power mm-hmm. than they did in the previous 2 years where they had no negotiating power. The negotiating was I've got $50K more to give you over asking price.
Right. Waiving
contingencies, not getting, an inspection on the house.
Right.
And then they realize the foundation is cracked or sliding or something. So that
I haven't had those problems, but I've heard horror stories.
Yeah, and I heard one just the other day from my branch manager here.
Out here?
Yeah.
Oh no.
Of a house that had to have all the electrical redone, like thousands and thousands of dollars, because he waived the inspection. Because he kind of had to get the house.
Had to.
So the point is that now, as a buyer, you have more negotiating power, right?
Right.
So that means realtors, when you're representing the buyer, you can negotiate and you can get sellers to pay some concessions. And that means that you can do a buy down. So you can do a 2-1 buy down, a 3-2-1 buy down of an interest rate.
What does that mean? 2-1, 3-2-1?
So that means that you can pay to have those rates bought down.
Okay.
And so the rate will change, the first year it'll be this, the second year it'll be this,
mm-hmm.
and you'll eventually get back to the original rate that you have when you buy.
So those are adjustable rates then?
Essentially adjustable.
Should people still be freaked out by those they were in 2008?
But they're not adjustable with how the market's going.
Okay.
They're adjustable set on these rates. You'll buy at a lower rate, an entry rate to get into the home. The next year, it'll bump up. The next year, it'll go back to the original rate that you were quoted or you locked in for that purchase.
So what's the goal with that? Because if you're buying down the rate, that's cool for 2 years, right?
Yes.
So what's the benefit to doing that?
The benefit of doing that is getting you in a home today. So everyone's very rate sensitive, and higher rates affect affordability. A
Right.
higher rate is going to mean your monthly payment's going to be higher. It's that simple. So by having a seller buy down your rate, then maybe you're able to afford more. You can actually get into the house. And then you're probably thinking like, okay, in a couple of years, I'll be making more money, so I'll be able to afford that. So it can be a little risky, but you can also have the seller just buy down the rate permanently as well.
Okay.
There are limits to how much you can buy it down, but
So what I've actually been seeing some people do is they've been considering, because you might know about this better than I do, but my impression is that rates aren't going to stay like this forever. I think that most people are hoping it's going to fall back down to the fives eventually.
Right.
So like the theory that I've seen is, you get into it with that buy down, then in 3 years or so you can refinance back when the rates are at 5.
exactly. So that's the other part of this. Rates are high, and even if you do a 2-1, 3-2-1 buy down, the rates will still be, high. But we're expecting rates to come down in the future, in the next few months. They might go a bit higher in the next 90 days, but we
Right.
think in maybe summer, maybe 9 months, maybe another year, they might come down to 5%, 4.5%. Nobody really knows, but yes, then you can refinance.
Right.
But now you're in the house, and you were able to get in when the competition was lower,
Right.
and you were able to negotiate more. So if you can afford to, right now is a good time.
Yeah. On my side, usually the next part we get into is kind of like, how's the market, right?
Yeah.
We are seeing prices go down. Not a lot. I think that everyone, when they think prices are going down, imagine like the price dropping in half like overnight, right? Which doesn't happen. But we are seeing a slow decrease compared to like the skyrocketing price that we saw last 6 months, last year.
Right.
So, the market is cooling a little bit, but I think that it's kind of deceiving because people are looking at the report like, oh, the market's cooling, oh, the sky is falling. And so people, especially recently, myself and some of my other colleagues are seeing all of a sudden a bunch of people jumping back into the market like now-ish. Because I even had this home that we are working on, and initially we offered way below the asking price because we're like, prices have gone down, this will be fine. And then we had a bidding war, and we ended up under contract for like way above what the asking price was.
Sure.
So, it's like a general trend, but we're also seeing like certain pockets, especially on the very high end of prices or the very low end of prices, where the market's still figuring itself out.
There still is a lot of competition.
Yeah, and
Okay.
I think that a lot of people forget that real estate moves really slowly, right? Because it takes us 6 months, 12 months, 24 months to really see the impact of something.
Sure.
So even as the rates are increasing now, I don't think we're going to see really what the prices are going to do for another 6 months, 12 months, maybe even longer.
Like
depending
next
on...
summer.
A lot of
example.
people are saying next summer is going to be one of the best times to buy. Me personally, as these rates keep going up, I feel like whenever the rates hit the max, we're going to need about 6 months to like see what happens. So, maybe next summer if they stop raising it, but it sounds like they're just going to keep raising it for a while now. So we'll kind of see. But what I worry about is people like tunnel visioning on the price, right? And like
Sure.
we're going to wait for the prices to be at the bottom, but now interest rates are, 10% or whatever.
Right. Well,
and
and people are, the price and the rate
right.
is what people are focused on.
It goes together though, and I think that a lot of people see one or see the other, and it's like, sure, the prices came down $5,000, but the rate went up, a half a point, so that's not a win, you know.
No. And you have the people on, the online kind of like people who are like, everything's crashing,
Right.
the world's going to end. Yeah, I don't.
Meanwhile,
think
we saw the price go down $5,000, which is cool. I would like $5,000. That's
Sure.
nice.
Yeah.
But it's not like, oh man, now I can afford my mortgage,
Right.
Because
Right.
that's so minimal over 30 years.
But back to like seller concessions, it's like okay, yeah, the price has been reduced 10,000. Okay, great. But that's not going to have that big of an impact on your monthly payment as a
Right.
buyer. But like a seller paying off your closing costs, buying out your private mortgage insurance, like that's going to give you a lot more affordability on your monthly payment, right? So I think instead of focusing on trying to lower prices
Right.
when buying a house, consider like negotiating those concessions. In my opinion, would
I
be
mean, are
the
you
way to go.
finding that sellers are open to it? You know, because like you said several months ago, even,
Right.
you're like, hey, can you buy down my rate? The seller would probably just laugh
They
and
would-
like
yeah,
goodbye, right?
yeah.
So, I mean, like in your office, are you seeing a reasonable number of people
Yes.
actually working with
Yes.
that? Okay.
Like the buy down is especially hot. A couple of the loan officers here are working on one right now. So it is happening. And speaking with other realtors like yourself, who are saying, hey, we can do a 2-1 buy down with this. Like now it's become a part of the lingo.
Right.
Because we haven't had to do that in what, decades.
Yeah.
So it's almost like a new thing that's just been invented, but it just hasn't been in vogue like it is now.
That's the tough thing with real estate now, I think, is it's always been different all of the time. But in these last 2 years, it's like, okay, cool, it's a new month, whole new game, right? Like every month something is completely changing what we have to do. So it seems like, maybe you're seeing different things here, but it seems like the people that are really being active are the people that you kind of want to work with, which is kind of why we're here as well.
Right.
Because there's a lot of the older, more retired folks that, we do the same thing every time. But the new programs, the new changes we're seeing every month are huge.
Right. Things are changing quickly. Like things changed in response to COVID, but now they're changing again in response to this rising rate environment.
Right.
Like we're having to pull old tricks out of our bag that we didn't even know existed because that's just what the market requires.
Well, we've been going up for, 10 years now. So we're having to go back to 10-year-old tricks,
Right.
So, but overall, what are you seeing in terms of like, are people kind of hitting the brakes? Are they hitting the gas? What are your clients doing? Are people kind of backing off a little bit now?
Yeah, I would say they are, just because of the volatility. Prices are still, affordability is just the name of the game.
Right.
And it's tough because you want to help people, you want to get them into a home. It's such an engine that drives this economy in this country, and people need a place to live at the end of the day. So whether it's investment or whatever, like, okay, but people need a place to live and raise their families. So we've got to get creative as realtors and lenders and change with the times and try to get creative and get people into homes with creative financing, creative negotiating, whatever. I don't know why I said that word like that, but
it's been interesting on my side. Yeah, it's been interesting on my side because people are like alternating between like rates are up, forget it, I'm out.
Yeah.
And then they call me the next month and they're like, okay, we got to get something now before it goes up. And then it goes up and then they hit the brakes again. So like buyers have been such a weird dynamic of like, we got to go now, never mind. And
right. Well, it's an emotional process as well, right?
Right.
It's not, people try to be logical when they're dealing with financial decisions, but it's emotional as well.
Right.
And so sometimes you just do things because it feels good.
But the tough thing for them, like, because I think that a lot of people are trying to time the market, and I think that there's a really tough dynamic between like not wanting to buy at the peak of the market, but also like the market is shifting, which for most of my clients, I've been saying like, hey, if you need to buy in the next year, now, because
Lock
like
in, yeah.
prices might go down a little bit, but I think rates are gonna go up a lot.
Yeah.
So if you're looking in the next 6 to 12 months, I don't think it's gonna get much better than now, really. If you're looking, in the next couple years, yeah, maybe sit tight where you're at, but I think that a lot of people that need to buy in the next 3 months, 6 months are afraid that they're going to buy at the wrong time.
Right.
But at least from my perspective, now is the time. What do you think?
Now, I would say if you can afford to buy right now.
Right, comfortably. We're not saying if you can't afford it to pack you in.
If you can comfortably afford to buy and not put yourself in a financially stressful position.
Mm-hmm.
There's lower competition right now. You
Right.
have more negotiating power, more buying power,
Mm-hmm.
essentially, than you are when things are going to come down. Like rates are going to come down, and then it's going to be a frenzy again.
Mm-hmm.
And you're going to have to compete with institutional buyers, people with a lot of money.
Right.
So if you can afford to buy, hey, lock it in. There's less competition and you have more negotiating power. Like, I have to reiterate that.
And I mean, and that's, for the first time buyers, but what about people that are sidestepping or upgrading? Like maybe their kitchen's too small, they really want a house with a bigger kitchen. I mean, what would you say to them right now? Should they be sitting tight and waiting, or should they be moving? Because
For a new kitchen?
I mean, if they're doing a side grade, they got let's say an $800,000 house, they're moving to an $800,000 house. Maybe the kids moved out, right?
I would say do, some kind of home equity loan or do a cash out refi and a renovation, whatever it is, but work on your house, build an ADU, do something.
Well, I mean, the big thing they're looking at, in my experience, is the rate, right? Because
Sure.
if they do the side grade, there's realtor fee stuff, whatever, right?
Right.
But the main thing they're worried about is that rate. Would it be possible for them to upgrade from where they're at to the new place and maybe keep a rate at 3%, maybe if they assume or something like that? Are you seeing that often?
Well, yes, assumable loans. This is something I presented on this past Thursday at a meeting with realtors. And assumable loans are an interesting thing because a lot of people know about them in terms of VA loans, that they're assumable. And you don't have to be a veteran or a military person to assume a VA loan.
Mm-hmm.
But all government loans are assumable. FHA, USDA, all of those are assumable. You have to check with the loan servicer to make sure that it can be done.
Mm-hmm.
And then you need to cover the difference between the what they owe on the mortgage on the house and what the selling price is, the asking price. If you can come in and cover that, right, whether it's with cash or a second mortgage,
Mm-hmm.
you can assume a loan and get potentially, a 2.75 interest rate or a 3% interest rate. If you're all about that rate, which, hey,
It's a big deal.
it's a big deal, you should be asking what kind of loan the person has on the home. If it's a government loan, you may be able to assume it. So that goes in line with our creativity, our creative financing, how to get people into homes with lower rates.
So what I'm hearing is if you have a assumable loan right now that's worth its weight in gold, and as a buyer, you should be looking possibly for something with an assumable loan.
Exactly. So if you're a seller and you've got a government loan on your house, you should be talking to your realtor, your listing agent,
Absolutely.
about how you can market that property as having an assumable loan.
Mm-hmm.
And you can market it, when people start asking you about it, you can tell them, hey, I've got a 3.5% interest rate right now on this. Wouldn't you like to have that? So it's a pretty good marketing tactic. It can kind of give you an edge. But yeah, everything has to line up for that to work. But I do know they've been done. So
It could be a game changer, right? Because for that guy with, like we're saying, I want a bigger kitchen,
right.
Going from 2% to 7% makes no sense. But now if they can do that type of move with an assumable loan, suddenly it makes perfect sense.
Right. Yeah, I mean, if everything lines up, you can cover the difference, and you're okayed by the servicer. In some cases with VA loans, it has to be okayed by the regional VA center.
Mm-hmm.
FHA, I think the owner has to have lived in the home for a certain amount of time. So there are different stipulations, but it's definitely worth considering.
Yeah.
Who wouldn't want an under 3% rate when rates are above 7?
Right.
It's a no-brainer.
So anyways, guys, if you want to learn more about any of the stuff we're talking about, we can't make the videos forever long, but reach out to me.
This one went a little long, yeah.
A little, but it's all interesting, good stuff.
Exactly, and there's a lot to talk about,
So for next time, if you have any questions about it, do reach out to me, reach out to Colm. We'll put the info down below. And see you next month.
All right, man. We'll see you next time.